Are you seeing any trouble like that coming out of sourcing and the vaults and storage and all of that?
Oh yeah, this has been a crazy week, an absolutely crazy week. If somebody's wanting to buy small product, 1 ounce product, 10 ounce product, what have you, gold or silver, the premiums reflect that there's way more demand than there is
Huh.
supply. And this week, we even had premiums begin to creep up on things like kilo bars. In fact, a number of our suppliers basically said, we're done, we're out. We're going to have to break contracts coming off of COMEX. We don't know when we're going to get supply. We began to see the spreads, the bid-ask spread on even generic products, 1,000 ounce silver
Really?
bars begin to move up. So big buyers who are saying to themselves, this looks a lot like 2008, 2009. It's time that we stop caring about price and just make sure we have sufficient ounces.
What's up, everybody? Joe Brown here. I've got an absolutely stellar guest on the show for you today. His name is David McAlvany, just a wealth of information and knowledge and wisdom. His family started selling gold back in 1972 when it was still illegal. They were able to find a way around the laws to do it legally, and most recently, they've started a gold storage company called Vaulted, where you can safely store your gold. David, thank you so much for joining us today.
Likewise, Joe, I'm excited to talk with you about lots of different things. It's we're not without content in these active markets.
Yeah, absolutely. Crazy times, especially over the last couple of days. I just like to start off, hear your thoughts. I know that somebody like you is probably looking a lot more long term, but crazy moves, especially in gold lately. And we just had, touched all-time highs again, a little bit of a sell-off today. What are your thoughts on just the last couple of days with the crazy moves in gold?
Well, from a couple of different perspectives, I mean, we watch the gold market from the standpoint of the COT reports, so we can see kind of the composition of buying. Is it the commercials? Is it the other category, which at this point is more of your institutions? Think insurance companies, pension funds, things like that. And then you've got your speculators. The speculators tend to be more hot money. They tend to be momentum players. And we've built a really good base of commercial buyers, and we've built a really good base in the other category. And just now recently have we begun to see that more speculative short-term momentum player come in. What I love to see is a correction like this, because it kind of scatters the Johnny come lately. If they don't understand what's driving the gold market, and has been driving the gold market actually for a number of years, then they bought yesterday and they're selling today. And so those dynamics are really important. The constitution of the buyers, very key. So
interesting. Okay. And so given what's going on a little bit longer term, everybody loves the store, loves waiting for the, kind of the collapse of the paper markets and the short squeeze and watching the inventory in the vaults drain out. From somebody who's kind of behind the scenes and an insider here, are you seeing any trouble like that coming out of sourcing and the vaults and storage and all of that?
Oh yeah, this has been a crazy week, an absolutely crazy week, because if somebody's wanting to buy small product, 1 ounce product, 10 ounce product, what have you, gold or silver, the premiums reflect that there's way more demand than there is supply. And this week we even had the premiums begin to creep up on things like kilo bars. In fact, a number of our suppliers basically said, we're done, we're out. We're going to have to break contracts coming off of COMEX. We don't know when we're going to get supply. So we began to see the spreads, the bid-ask spread on even generic products, 1,000 ounce silver bars begin to move up. So what that indicated, so what I said earlier, I need to put a caveat in there, because yes, we've seen the Johnny come latelys, the speculators, the hot monies, call it even, sort of the hedge fund crowd coming in late. But we're also seeing these constructive interests, big buyers who are saying to themselves, this looks a lot like 2008, 2009. It's time that we stop caring about price and just make sure we have sufficient ounces. Just buy. So, and again, you see that when you're talking 100 ounce gold, 1,000 ounce silver, all of a sudden those premiums begin to change. And it tells you, again, the constitution of buyer, it's real money, it's big fish. And they're making a bigger splash in the market. I think the longer term trend for gold is very positive, very constructive. That other category I mentioned to you in the COT reports, I like seeing that grow. It was 28%, say 3 months ago. Now it's 35%. And what I like about that is these are guys that buy and hold. I mean, think of this. If you're an insurance company and you say, I've got 90% of my assets in bonds, I think maybe I ought to put a spoonful of gold into the mix just as an inflation hedge. Well, a spoonful is different than a shovelful, is different than backing up the truck. And I think we could still see those institutional buyers not buying to flip, not buying to make a quick buck, but to balance out what is really a lopsided portfolio. I mean, you've got the classic investor doing a 60-40 mix between stocks and bonds, but these big institutions are really heavy in fixed income. And you look at LQD, you look at TLT, you look at HYG, you look at your investment grade to junk debt, you're getting slaughtered right now. Even in treasuries, this is a terrible year for the treasury investor. So they're having to rethink and having to look at gold differently. Yeah, I think that's very constructive long-term, just not even from a short squeeze standpoint, but we're building a really solid base of long-term buyers.
Yeah. Well, especially like you said, with the allocation to fixed income across the board, if the inflation numbers even just stay where they're at, let alone start getting bigger, and the Federal Reserve can't, let's say, tighten as much as they are planning on due to the things, war and invasion and all of that, then we have this real potential, situation where institutional investors, giant portfolios all over the place are going to look and say, there's no more upside on these bonds, and there's only downside. It's like you've got a guarantee of making a little or a chance of losing a lot. And we might start seeing, like you said, even a spoonful of most portfolios going into gold is a massive move.
Yeah, and I think that also raises the question of how much the Fed can raise rates. I mean, they can talk, certainly, and they can jawbone, try to move the market that way. But if you're dealing with a $30 trillion base, and that's just the federal debt, not the corporate or private or things like that, you begin to adjust rates higher, and you're affecting cash flow in a massive way. I mean, for corporations, it's a huge deal. For the government, I mean, look at interest on the national debt as a line item. Maybe it's 6-7% today. You start bumping rates up, and maybe it's 10 or 25% of the total budget. How do you pay for anything else? So it can spiral out of control pretty quickly because the scale of debt. They've been assuming that if they can suppress interest rates, they can continue to expand the stock of debt. No big deal. Just more debt, no big deal. So tightening I think we're going to be surprised by how long inflation is with us. And the rate of change is going to be different. It's not going to be as aggressive, but to hang out at 5% for the next 5 years, to bounce around between 5 and 10%. I mean, watch the PPI, the next PPI, and for the rest of the year, your producer price index is going to tell you a much truer story of inflation, because the CPI they get to play with. All the inputs, they've got weighting changes. In December, the good president said, we've peaked on inflation, we've got it. Well, lo and behold, the Bureau of Labor Statistics had been given instruction to re-weight the components.
Yeah,
it didn't help. You still had a 7.5% print. And I think PPI gives you a more accurate picture of what's in the pipeline for consumers in reality, beyond the statistic. And so, we're coming up on 10. Wouldn't surprise me to see 20% by year end. That again, I like Jim Grant's comment that inflation is like kryptonite to financial assets. That's what we've got. That's what we've got. We're no longer going to be able to leap buildings in a single bound. Like, we're going to be earthbound. We're going to see valuations come back in on stocks and bonds. And this is your next round of growth for gold.
Right.
You begin to see the average investor say, it's not working for me. I've got to find something else. Well, what is working? I mean, in our asset management group, we're up 7-8% this year on a 40%. We have an allocation of between 30 and 40% cash. So we've reduced risk considerably. We're positioned in a unique way. Part of that is metals and metals related shares, global natural resources, a whole bunch of other stuff, but it's all hard asset related. When someone says, hey, I'm losing 10, you're making 6, I need to do something different, the traffic begins to flow dramatically. And I think that's what gold sees for some time now.
Definitely. Yeah. Well, in a situation like this, especially when you start to talk about investors finally catch up and then that money starts to flow, historically, when this starts to happen, bad enough, you start to see things like, financial repression step in, because if who was it? I think it was Paul Volcker said, inflation becomes useless once people anticipate it. And so if they're printing money and they're not able to buy things at the lower prices first, people are dumping the currency. They're gonna probably try and put walls and capital controls of financial repression. And there's this there's this idea that if you don't get your money into something that will preserve your wealth while you can, it might be very difficult to do so later on when you need it the most.
Yeah, I think that's a fair point. And when I had a conversation with Carmen Reinhardt a couple of years back, and she's contributed to that conversation on financial repression. Mm-hmm. Her comment was, we essentially, from a policy perspective, we have to corral investors. And think about that. I think of it like it's sort of the dehumanizing of, you're nothing more than cattle. You're in the system, and we just need to direct the flow. So whoom, there come the barriers, and whoom, there you're directed. You can say yes to A and B and C, but not D, E, and F. So it's kind of the fallacy of false alternative in the world of investing. You have all your options open, A, B, C. All your options are open. Right. And so that's where I think an intelligent investor has some imagination and says, I should do some things now that maybe I can't do in the future. When they're more desperate and are needing to corral my decision, fascinating ideas, sort of the presumption of control, the presumption of what they should be doing on our behalf. A little offensive too.
Yeah, definitely. And especially because it results in a wealth transfer from the individual to the state. It's a little bit scary too. So, well, tell me a little bit then about McAlvany Group and how that led, your story and how that led to Vaulted, because I'd really like to hear more about Vaulted, but I want to hear how you got there first.
We've been innovating in the metal space for 50 years. This is our 50th anniversary this year, so we're pretty excited about
congratulations.
that. Congratulations. My parents started the business back then, and we started at a time when gold was illegal. So 1972, it wasn't legal until January 1st, 1975. My dad was involved with a couple other guys getting the legislation changed. It had changed in 33, couldn't own it. And so bullion became legalized again, January 1st, 1975. In the early 70s, we had found somebody who would make 1 and 2 ounce gold medallions for us. And they had religious themes on them. Because they had these religious themes, they had a tax exemption. You could own, a gold cross. You could, but here we are, we kind of snuck in under the gold cross thing by saying, well, here's Jesus feeding the 5,000, or look, a picture of Noah's Ark. And people are buying 1 and 2 ounce, 24 karat gold medallions. And that put us in a position to provide metals to all of Wall Street. They didn't have trade desks because you couldn't own it. So we had kind of a first mover advantage in the bullion business, 1972 to 73. We built on that since then. We were the first company to put physical precious metals into an IRA in the mid 80s. And Vaulted is kind of a 21st century iteration for us, where on a computer, on your smartphone, you can manage what we would consider more of a liquidity position, a cash equivalency position. If you're sitting with bank money, dollars at Wells Fargo or B of A or whatever, and you're looking at a 7.5% haircut this year on those holdings, you might consider denominating your resources differently. It's not been a big deal at 2%. But down in Argentina, where it's 30, 35, 40%, you think twice about where you put your money. What institution do you put your money in? So what we've done is we've created a platform that allows you to buy fractional ounces with the Royal Canadian Mint. You can buy gold instead of, it's really democratization of gold. You can buy gold in increments of $1, $5, $10, treat it as a savings account, and your costs are low. We've got great pricing direct with the Royal Canadian Mint, took out all the middlemen. Storage costs are low. You're talking about a crown property in Ottawa, and it's great. We're dealing with conflict-free gold, which is one of the only places in the world that guarantees it is a Royal Canadian Mint. And just super easy platform. I still think there's value in having gold in your physical possession. I still think there's value in utilizing the tax-deferred nature of a Roth or traditional IRA for owning metals. But Joe, I think it's like asking, when you go to the golf course, how many clubs do you want in your bag? You got to have a variety of things because they all do something different. Right. So you may have gold in your possession, you may have gold in an IRA, you may have gold in a program like Vaulted, and that's where you can get liquid like that. Our settlement is better than a stock transaction. T+3 is your standard settlement for stocks. We're 2-day settlement. we're we're more liquid than so I like the
Yeah.
program for the liquidity factor. And if you're looking for an alternative to cash, boom, that's your tool.
Right. A lot of people say, if I don't hold the gold in my hand, then it's basically worthless because the point of gold is to eliminate counterparty risk. But what happens when somebody comes and knocks on your door and says, give me the gold, right? Then the gold you hold in your hand is worthless. What happens when, you have to flee the country and you're not going to get on a plane with
Right.
any ounces of gold? They're going to take that. They're going to stop you. You have to, even if you try and declare it, there's limits and there's paperwork. And especially if there's financial repression going on, there's no way you're taking any significant amount of wealth in physical gold with you if you have to leave. And so there is a big amount of wisdom in storing in diversified ways through, different companies, different platforms, different like types, like you said, an IRA versus, a program like Vaulted, especially when the pricing is so good. Yeah. And even on delivery, like, right, you said you guys Vaulted will deliver if you request delivery, right?
Yeah, this is allocated gold, physically deliverable gold. Now, if you want to deliver a kilo bar, obviously you have to own 32.15 ounces.
Mm-hmm.
If you want less, then you can convert it, what we call a dynamic deallocation, and move it into a smaller fractional bar. Pay for the difference. You don't have the same economy of scale with a 1 ounce coin as you do a 32 ounce bar. So you then receive the product that you want to receive. It really is handy in a market where premiums are rising and you want to position in ounces, but you don't want to pay a 30% premium or whatever the going rate is for a small product like an American Eagle, a Silver Eagle, for instance. I'm just picking on the absurd ones,
Mm-hmm.
but premiums there. Our cost is like 20% over the silver price. That's insane.
Yeah.
If I've got to pay those huge premiums, I'd rather position in a generic product and work my way into what I wanted to own when I don't have to pay the premium. And that Vaulted can do that for you. And I think we're going to get to a point where you may call your local coin dealer or, even us, we've been doing it for 50 years, and say, hey, I want to take delivery of a couple of maple leafs. Well, you can wait 6 months. Or you can pay $300 premiums.
Yeah.
Position in Vaulted, and then take possession when you're not having to pay the premiums that are
Right.
demanded in the current market. So it's a great tool for that too.
Right. Yeah. And I just want to explain one more time for the people who don't, who have never used a service or a product like this. If there's a big bar in your vaults and somebody owns 1 ounce, that means they own 1 ounce of that bar, and the rest of the bar is owned by whoever owns, more ounces of that bar. And so if they want, they can continue to stack until they get up to owning a full bar and take delivery of that. Or if they want a smaller, like a 1 ounce coin, like you said, then there's just the conversion and you have to, pay the fee to get the because it's more expensive to get a coin than a big bar. And so just because you own a piece of a bar doesn't mean it's not allocated. Like, you still own the actual gold that's there. Right.
And as soon as you own a full bar, then that serial number is assigned to you.
Oh, that's cool.
Yeah.
That's cool. Okay. Well, I'm going to put the links for your services, your products in the description of this video so that anybody who wants to can check it out and get started trying it out. And as always, I really appreciate it. This was a fantastic conversation. And in times like these, I just don't see really much downside in diversifying at least a portion of your portfolio to protect yourself from inflation and financial repression.
Joe, thanks for having me on the program. I enjoyed the conversation.
Absolutely. Thanks for being on, and you have a great day.